Hello everyone, welcome to Betty Academy. Our job is to make school easier, and today we are going to learn about the difference between capital expenditure and revenue expenditure. If these are the kind of videos that you'd like, kindly consider like our videos, share, subscribe, and don't forget to comment down below. So under capital and revenue expenditure, we look at under capital and revenue expenditure. Every organization, firm, company, and even the government incurs several forms of expenditure for various reasons. Some of these reasons include generation of higher revenue, and others may involve investment strategies to bolster maintenance or finance business expansions, which would help the entire organization in the long run. So when companies prepare their upcoming calendar budget, they categorize it into two parts, that is expenditure and receipts, which can be further subdivided into revenue and capital variance. The primary concern for companies and organizational bodies in incurring expenditure is to improve the overall efficiency of the business, which in turn transcends to increased profit returns. In the branch of commerce, understanding the difference between capital expenditure and revenue expenditure helps students to realize the fundamentals of the budget allocation of a company, firm, or an entire nation. These are high-value expenditures that have longer requirements duration, thus they are timed as long-term expenditure. Due to this, there is an increase in earning capacity and a decrease in the price of the assets. As the cost of the assets are continuously revised according to the depreciation, the future costs are reduced. The capital expenditures enhance the position of the business and trade. So we have that is what falls under capital expenditure. So capital expenditure is also referred to as CapEx. Is the funds used by a company, firm, enterprise, or an organization to acquire, upgrade, and maintain its fixed assets. Such assets include property, plant, and equipment, which are mainly workstations, machinery, infrastructure, etc. Such assets are usually long-term and offer productivity for more than one period. When an enterprise or organization make investments on assets for generation of profit in the days to come, such expenditures are mainly capital in nature. Through capital expenditure, companies and firms can buy new equipment or even use it for maintenance of assets. Yeah. So on the other hand, we have the revenue expenditures. It is totally different from capital expenditure. They are not high value items, but they are the routine expenditures in the normal business which maintains fixed assets. Unlike capital expenditure, it does not increase the revenue but stays maintained. The assets are consumed in an accounting year and there are no future benefits. The asset prices are stable or fixed. The assets are consumed within a year and hence purchase should be made again. These are recurring expenditure. So when you look at the examples between capital expenditure and the revenue expenditure, for instance, we have one under capital expenditure. We have office buildings expenses. These ones, the expenses concerning acquisition of buildings, right? So when you look at that, expenses concerning acquisition of buildings, these are large, they involve large amounts of money. Also the second one, workplace equipments like computers, printers, coffee machines, furniture, etc. All those ones, they're expensive. And patents, trademarks, copyrights, they all fall under capital expenditure. On the other hand, we have examples of revenue expenditure. These are the normal routine expenditure that are incurred in a business. For instance, we have the indirect expenses. Indirect expenses, they are such as selling and distribution of goods other than manufacturing, right? Yeah, because any cost that is incurred under manufacturing, this is what you refer to as direct expenses. These are the costs of manufacturing raw materials to convert into finished products. So as we wrap that one, so let's give an overview of the difference between capital expenditure and revenue expenditure. So in terms of definition, we have capital expenditure is incurred to acquire assets and enhance the capacity of an existing asset, result in increasing its lifespan, right? Then, when you look at the definition of revenue expenditure, we have the expense incurred to maintain the day-to-day business activities. So that one is the normal routine, day-to-day expenses incurred by a business. When you look at its tenure, we have under capital expenditure, it's long-term. Under revenue expenditure, it's short-term. When you look at the value addition, the capital expenditure, it enhances the existing asset value. But the revenue expenditure does not enhance the existing asset value. In terms of physical presence, the capital expenditure has a physical presence except for intangible assets. But the revenue expenditure does not have a physical presence. So in terms of occurrence, we have the capital expenditure. It could be a one-time off, right? But for this one, we have it's non-recurring in nature. But for the revenue one, it's recurring in nature. They are the day-to-day expenses incurred in running the business. In terms of availability of capitalization, yes, for the capital expenditure, you capitalize that amount, but for the revenue expenditure, you don't capitalize, right? So when it comes to impact on revenue, under capital expenditure, it does not reduce business revenue, but the other one, it reduces the business revenue, because by the end of the day, you need to get a net income, and the moment you have the income or the expenses that are incurred by the business, which forms the revenue expenditure, they must be deducted from the income of the business for you to get the net income. So it reduces the business revenue. In terms of potential benefits, capital expenditure, they have long-term benefits for business. Yeah, for instance, when you are maintaining the buildings, right? So the benefits will be of a long-term nature, but under revenue expenditure, the benefits are short-term. So the other one, in terms of appearance, it appears under capital expenditure, it appears as assets in the balance sheet and some portion in the income statement. Yeah, the moment you capitalize that expenditure, it means you'll be deducting a portion of the same amount that is appearing in the balance sheet, and that's why you will have we have the amount both in the balance sheet together with the other amount in the income statement. But under revenue expenditure, you don't get anything in the balance sheet. Everything, it always appears in the income statement. So that's the end of our lesson. Until next time, bye.